Yo guys, what's going on? Back in today. I'm gonna be making another quick little tutorial video. I'm teaching some guys how to trade right now, so I'm just trying to pump out some content for them. But if I'm not teaching you, I hope this helps you as well. This is gonna be very simple, and I'm not gonna go too much in depth with a bunch of words and shit. I just want to show you guys on the chart what we're gonna be talking about today, which is fair value gaps and inverse fair value gaps, so FVGs, IFVGs. I just want to show you guys on the chart what to identify because I know a lot of people struggle with this. When I was first starting, I was marking out the wrong shit and it was fucking me up. And I know for a lot of people it is kind of confusing. It's a super simple concept, but you kind of gotta, I don't know how to say this. You need to be able to grasp it. Once you grasp it, then it's easy, but it kind of takes like you got to rewire your brain to kind of see it. And then once you see it, you see it everywhere, right? So let's get into fair value gaps first. So fair value gap is just a 3-candle pattern, guys. And it's a 3-candle pattern where you get a nice movement in price, either up or down, doesn't matter, right? And the middle candle leaves a body where nothing's touching it, and that indicates an imbalance in price because orders moved very fast and certain orders couldn't get filled because price moves so fast, right? And the reason these are important is because big money will want to bring price back up to that spot to then fill those orders that couldn't be filled. That's why fair value gaps are important when you're trading. And I'll show you guys here. This is just the S&P chart. I don't have anything marked out. This is just a random, this is like last week. You can see this everywhere, guys. They are everywhere. I'm on the 15-minute chart, and this is going to be our first one here. So I'm going to mark out a box. And as you guys can see, this is a prime example of a fair value gap. You have this big candle in the middle here. This candle was very expansive, 20 points. And your fair value gap is going to be forming from this candle here. It starts here and it's going to end here on this candle. So it's 3 candles, 1, 2, 3. And where you're going to mark out that candle is the middle section, because that is the part that we didn't get anything filled. You got to get rid of these dots now quickly. But you can see here we left this big candle, and the reason this is a fair value gap is because the wicks, this wick here and this wick, do not come into this area here. So the part you're going to mark out, there should be no wicks. I see a lot of people where, for example, just find something here. Right here, right? You get 3 bullish candles right here, and like no, that's not a good example. This one here. So some people mark this out as a fair value gap because you get 3 candles going down, but that is not a fair value gap, guys, because this wick fills it in. So price came up through it. That is not a fair value gap. A fair value gap is where there is nothing touching this body of this candle here, right? You can see there's no wicks coming between it. So that would be a fair value gap. This would be a fair value gap, right? This would be a fair value gap. If my magnet will work with me. So you guys can see, same thing here. 1, 2, 3 candles, no wicks between the body. So that is fair value gap. 1, 2, 3 candles, no wicks between the body. Fair value gap. Right here, right? 1, 2, 3 candles, no wicks touching the body. And as you can see, this is a good example. Price comes down, taps back into the body of the candle, and we keep going up. Right here, price comes up, taps into it, we go down. Because it's price rebalancing the area, filling the orders, and then it makes its move. So that is a fair value gap. That is how you do it right. It is not like this. If there is a wick, there is no fair value gap there. That is what a lot of beginner traders mess up. And these fair value gaps are everywhere, guys. Like this is a good one here. And you can see, so price is now coming up into this. And if we respect it, price should continue going lower because there's orders here, right? So we're respecting this gap, filling the orders, and we're going to push back down. So that is a fair value gap. Make sure you guys see, it's very crucial. No wicks, just a body. This wick ends here on this candle. This wick ends here, and that's where you're going to mark out. You're going to mark out the top of this third candle's wick and the bottom of this first candle's wick. And sometimes they might even be little tiny gaps. You can see this one. It's tiny. Still a fair value gap. It's not about the size. Sometimes a little gap like this will get wicked right through and it'll hold, and you can get a good entry off of that. Sometimes there's bigger ones like this, right? They're all over the place. Fair value gaps are everywhere, guys, and they are not always gonna be a great entry. That is when we get such things as an IFVG. An IFVG is when a fair value gap gets disrespected. So for an example, like I showed you earlier of a fair value gap being respected, would be this one here. Price taps into it, and just because it wicks into it is all you need. The candle doesn't need to close in it. Just wicks into it, and then we push down, right? Like this is not a perfect setup, but let's just say you enter on this candle right here. You target back down to this low here, and you keep your stops above this gap. You can catch easily a 1 to 2 off of that, just off this little retracement, right? And that is an example of when price respects it. So when price disrespects a fair value gap, for example, let's see, this right here is still respecting it. I want to show you guys this first before we get into IFVGs. Turn my fucking magnet off. So this is an example of price still respecting it. All the way here, you can see the wicks come above the gap, but the bodies of the candle do not close above it. So it's still respecting this gap. For it to be disrespected, these bodies have to close above. The wicks don't matter, guys. It could wick all the way up here. It doesn't matter as long as the body comes back down and closes below this gap. It is still valid, okay? So this gap isn't broken till all the way over here on this candle. And then now this is inversed. This is an IFVG. And your next gap, your next bearish gap would be up here, which price then comes up to. And then look what happens when we come up to this point in price here. This is the last fair value gap on the leg down. Price comes up and respects this gap. Again, we wick through it, but that doesn't matter. And this is honestly a perfect setup here, guys. You can see we disrespect this one, so you're waiting. Disrespect this one here, and then you wait. We chop, respect this one, and then we get an IFVG right here, which is what we're going to get into next. And you can see price has respected this one, and now price has disrespected this one. So this is an A+ setup here, how you use fair value gaps and IFVGs. An IFVG is when price now closes below or above the fair value gap. So price here has closed below this bullish gap, and we have respected this bearish gap. So what can we assume here, guys? We can assume that price wants to go lower, right? So now, what are we looking for? You can see we've inversed this, and now we've created a new bearish fair value gap here. And price makes this fair value gap with 1, 2, 3 candles. So that's your new fair value gap. We tap back into it on this candle, and there you go. There is your entry right there. You can even wait till that candle closes to make sure you respect it, enter right there, target down to this low, or whatever your target is, straight to take profit, guys, straight to take profit. And look how much that dumped. It's just simply reading order flow, guys. Price is always gonna want to rebalance fair value gaps, and you guys need to pay attention to that. So back into IFVGs. Like I just said, they are when price disrespects a fair value gap, and disrespecting is closing above it, like right here. Not like this when the wicks come above it. If the wicks come above it, it's still respecting it. It's only when the body, like right here, closes above this gap, then it turns into an IFVG. Right? So again, we had one right here, like I just showed you guys. That is an IFVG. And these are not always going to work for entries. And I'm going to show you guys a little trick to make them even more probable. I'll have to do this on a newer time frame. But an IFVG, like I said, is just price disrespecting fair value gap. You got one here, right? So price comes up, disrespects it, and now we're pushing up. And usually when you get an IFVG, you will push up to either the next key high or low, or you'll push up into the next unmitigated, so this is unfilled fair value gap, which is exactly what we're doing right now. Price is going to test this gap, and if this breaks, then you can assume, where are we going next? Probably up to this high. If that, we push past that, where are we going next? Probably this high, right? So you're moving from internal to external liquidity, right? So for IFVGs to really work, what I found, let's just say you find this one on the 15 minute. So this is where price is right now. Let's go down to the 5 minute. You can see on the 5 minute, we had one up here. So to enter this trade, you're almost going to want to wait till we disrespect this fair value gap as well. You could enter down here, but what happens if we come up and take this? Go down to the 3 minute. You got nothing here. You go down to the 2 minute, which I can't show you guys, don't have premium, but you would use the 2 minute. You go down the 1 minute, there's nothing there. So the last thing holding here is this 5 minute gap, right? And as you can see, your entry would be after this gap gets inversed. This 15 minute one could very well be a fake out. This is how you use IFVGs. You don't just take the first one you see. You need to check all the time frames, make sure there's not something you're missing. I tend to check 15, 5, 3, 2, 1 when I'm using an IFVG, right? So this one gets inversed. That's valid IFVG. But then you still have this 5 minute here. And when we get the IFVG on this 5 minute, which is closing above it, and like I said, there's nothing stopping us on the 3 minute, there's nothing stopping us on the 1 minute, then in my eyes, this is a valid entry. So what do we need to do once we get an IFVG? You need to wait till you tap back into it. So you don't enter right away. You wait. Look at this. Next candle taps into it. Enter here. And now, what do you target? Like I said, the next range of liquidity, which would be this gap, which it's about to hit. Or you go break even here and you target up to this high. And your stops are going to be below the newly created fair value gap going the opposite direction. So this is a great trade right here, right? Super, super simple, guys, but you guys need to understand how IFVGs work. And you need to make sure that you're not going to get caught up, because you get this 15 minute IFVG here, but you got this one here. And then you got this 5 minute here, right? So you need to make sure price is aligning across all low time frames if you're going to use IFVGs. There's times where you're going to be able just to rip off a 1 minute and then there'll be nothing on the higher, well, not higher, but 5, 15, 3 minute, and you can just take one right off the rip on a 1 minute. And sometimes that plays out, guys, but usually you'll have something else stopping, and you always want to wait for confirmation when you're looking for reversal trades, because reversal trades, they're not always probable, because if you're taking a big move down, yes, price is going to want to rebalance this range, but you're in a big downtrend, right? Like, you've dropped very far, 0.5% there, right? So you got to expect you're bearish on the day, and we might just have to rebalance a range and then come down. That's what I said. When you're using IFVGs, make sure you got confirmation before you enter them. They are great if you use them right. If you don't, you will get burned. So one more time before I end this video here, guys, let's just go over this again, just so you guys see. A fair value gap is a 3-candle pattern leaving a gap between the wicks, okay? It is not this 1, 2, 3 with wicks in the middle. Just because that's a big candle doesn't mean it's a fair value gap. It's not, where's another good example? It's not this. This is a big candle in the middle, but because the wicks of these two candles come down and don't leave any unwicked space on this body, that is not a fair value gap. Like, I'll see people marking this out as a fair value gap. It is not. For this to be a fair value gap, this wick has to not be touching this wick, which we have right here. That is a fair value gap. So keep in mind, guys, 3-candle patterns, super simple. Just count them out and you'll start to see it. Look, 1, 2, 3. No wicks. These wicks aren't touching each other. So you can mark out your gap in the middle, right? And these are just everywhere, guys. These are everywhere. 1, 2, 3. Right here. Once you guys start to see this, it's impossible to ignore. Like, you cannot ignore this. 1, 2, 3. So just count them out. 1, 2, 3. The wicks aren't touching in the middle. That is your gap. And you are going to mark out from this wick to this wick. And that is your gap. As you can see, this one, another good setup here. You can see we get the IFVG right here. Because this fair value gap gets disrespected by this candle. Price then creates this bearish fair value gap, and we come up and we respect it. So what does that mean? We are going to enter a short position, right? Look at this, guys. It is so simple once you figure it out. Target down to this low, or target to this unfilled fair value gap here. Target here. Like, there's just so many possibilities when you get the hang of this, right? It is super simple. But you need to keep in mind, like I just said, 3-candle pattern and no wicks. No wicks, guys. If there's wicks, you don't have a fair value gap. And IFVGs are the exact same thing. It's just when a fair value gap gets broken. So let's go over those one more time. So a valid IFVG, you got this gap here, right? This is a fair value gap. 1, 2, 3 candles, no wicks touching in the middle, and price breaks above this. So now this is an IFVG. Price has disrespected this gap and closed above it. Not on this candle when it wicked. That is still respecting it. It's when the body of this candle closes above it. That is a valid IFVG, right? Another example here. Let's find a nice looking one. Right here, there's one right there. We make a fair value gap coming down. Price then does what? Closes above it. That's an IFVG. Another one right here. We make a fair value gap on the way down. Price closes above it. The body closes above it. That is an IFVG. We come down, we tap back into this. Price comes up, and now we've got an IFVG going the other way. You can see we created this gap here. Price disrespects it here, right? So they're all over the place, guys. You just need to keep in mind 3 candles, no wicks touching the body. No wicks touching the body. No wicks touching the body. Keep that in your head. If you see wicks touching each other, it's not a gap. That means orders were still filled. Orders were still getting filled here because price comes up into that level. That's not a fair value gap. It's only when there's an inefficiency in price that we are going to want to rebalance so those orders can get filled. Okay? If you guys have any questions, leave them in the comments. I'll drop my Telegram as well if you guys want to hit me up on Telegram. I'll leave my Instagram there. You guys can DM me on Instagram if you have any questions about this stuff. But it is super simple, guys. Once you get it, you get it. It just, you see it everywhere. And you won't even have to think twice about this stuff. You just see it every time you look at a chart. It's everywhere, okay? So keep that in mind. Rewatch this if you need to. Try it out on your own charts, and I'm sure you guys will figure it out. And you're one step closer to being a profitable trader. So with that being said, I'm going to wrap this video up here, guys. Hope you guys enjoyed. Leave a like and subscribe, and I will catch you guys in the next one.